Hello everybody, Wesley here from Etherbrain.com. Today I am bringing you a video all about tax-free savings accounts. Now this may not sound like the funnest thing in the world for a brand new year, but the reason I want to talk about this video is because it can be very important in growing your money completely tax-free, which sounds great, doesn't it? There's several things we need to go through. First, we'll talk about what a tax-free savings account is. It's actually quite simple. It's an account that allows you to grow your money tax-free. So whatever money you make in that account will grow completely tax-free. So all the dividends you make, the capital gains you make, all of that will be completely tax-free, which is awesome. Now, it is a kind of a government-issued account. And so anything with a government, there's always rules and caveats that you have to follow. The first being that, well, let's talk about when tax-free savings started. So the tax-free savings account started in 2009. So tomorrow, because I'm recording this the last day of 2018, it will be 1 decade. And so it started in 2009, and in each year, you were given a contribution limit. So in 2009, I believe the limit was 5,500. It might be 5,000. No, 5,500. So throughout the year of 2009, you could contribute that much throughout the year, and that money will grow tax-free. So all the dividends you get, all the capital gains you get will grow tax-free. And each year after that, you're given more contribution room. So 2010, 5,500, 2011, 2012, but it changes every year. So in 2019, the contribution limit is $6,000. So starting now, well, I guess starting tomorrow, you will be allowed to contribute an additional $6,000. Now, how do you get this contribution room, or is there any rules? Well, you have to be over 18 years old. You have to be the legal age, and you do not have to open a tax-free savings account to grow your contribution room. So, for example, I turned 18 in 2017. So in 2017, I will be awarded that year's contribution amount, which was 5,500, and then I will add 2018 because 2018 has come and is almost gone. So that was 5,500, which is 11,000. And then tomorrow, when 2019 rolls around, which I'm super excited for, I will get that $6,000. So my total contribution room will be $17,000. Now this room never goes away unless you add money into your account. So if you just turned 18, let's say you turned 18 in 2019, and you are given that $6,000 of contribution room, and you don't contribute anything until 2020, it's not taken away. You will always have that contribution room unless you actually contribute that money. Now, a couple rules you need to be aware of is that when so let's say you just started your tax-free savings account, you turned 18 in 2019, which is tomorrow. You are given that $6,000. So let's say you max it out, you put $6,000 in it throughout that year. Your contribution room only counts on money you put into that account. So if you put $6,000 and you get a dividend of $20 a month, let's say, that will not put you over your limit. When you go over your limit, you start paying taxes, and I believe there's a fee. So you don't want to ever contribute more, but your dividends and your capital gains do not count towards your contribution room. So you can add $6,000 throughout 2019, but let's say you take money out. So let's say you add $6,000, and throughout the year you need to buy a new car. Your car breaks down, whatever it is. You take out that, let's say $3,000, you take half. Well, you have still contributed $6,000 even though you took half of it out. So if you were to take that $3,000 and put it back in, you would now be at $9,000 of contribution. So then you would be over your limit. So be very careful when you take money out, when you put money in, and then you take it out, because that will bump you over your limit. And you don't want to do that, because then you pay taxes. And the worst thing in life is paying taxes and public speaking. But I hate paying taxes more than public speaking, so don't do that. So if you don't over contribute, you won't pay taxes, which is fantastic. So at the end of each year, when you go through the next year, so let's say I contributed $6,000, I took $3,000 out, and 2020 rolls around, I am awarded that contribution room back. And so if you put in 6,000, you took out 3,000, at the start of the new year, you will be given that $3,000 back. You will be allowed to contribute that money back into that. Now, a tax-free savings account is really important because it allows you to grow your money tax-free, which is fantastic. Because on capital gains, you are taxed at 50% of your capital gains at your marginal tax rate. So if you make, $10,000, you will be taxed at 5,000 of that, and if that's 20% of your marginal tax bracket, you're going to be paying lots of taxes. But in your tax-free savings account, if you make $10,000, you will keep all $10,000. So it's a great way to save money over a long period of time. And that's what I highly encourage you to do, and that's what I do, is that when you open your tax-free savings account, which you can just walk into the bank, bring some government-issued ID, you can open your tax-free savings account and start making monthly contributions. And when you start doing that, you can start investing in stocks, bonds, whatever you want, and mutual funds, index funds, ETFs. You can invest in those and you can start growing a dividend income, or you can buy and sell stocks if you're into trading stocks, like swing trading or penny stocks or whatever it is. You can do all of that in your tax-free savings account, and the only thing you'll pay for is the transaction fee. So with TD Bank, it's like $9.99, so that's all you pay to buy the stock, and then you can make the dividends. Now, I would highly encourage you to save this for big purchases or for the optimal outcome for retirement, because we want money when we retire, of course. And so when you put money into that each month, as long as you're under your yearly amount, that money can grow tax-free. And unlike an RSP, you are not forced to convert it into a RIF or anything, so it's all on your own terms. You can take it out completely tax-free. Now, I've been asked the question why it's tax-free, and it's because you fund it with after-tax dollars. So if you were to get $100 pre-tax, well, you wouldn't get the $100 pre-tax, but if you earned $100 at your job and you were taxed at 20%, so that's $20, you would get $80, and then you could fund your tax-free savings account with that $80. So you've already paid tax on the money that you're funding your account with. That's why it is tax-free, and it's also an incentive to help people not get in so much debt and to save for retirement. It's not really a savings account. You put money in, you save it for a year, then you take it all out and you go and spend it on a new car or whatever it is. You can do that if you want, but I would encourage you to save it for retirement or for like a business venture, which is probably what I'm planning to do with mine, is I save it over 10 years and then I can use it to start an investing company or holding company or whatever it is. But with an RSP, it's pre-tax dollars. So you fund a registered retirement savings plan with pre-tax dollars. That's why when you withdraw it, you have to pay at your marginal tax rate. And you defer your taxes in RSP. I don't want to talk too much about RSPs, but I want to make that distinction. With a tax-free savings account, you cannot use it as a tax write-off because you've already paid tax on it, and that's why you do not pay taxes on it when you withdraw it. And there's no limits, like at 71, you don't have to convert it into a RIF or anything like that. And so it's a great tool. I highly encourage you to get one. And I thank you so much for watching. I hope you learned about tax-free savings account. Start 2019 with a great year, become financially independent. If you want help with that, I will leave a link to my website down below, www.matherbrain.com. You can learn all about investing, stocks, tax-free savings account, RSPs, RIFs, you name it, it'll be down there. Books, great books you want to read, it'll all be down there. You can also follow me on Instagram and Facebook and Twitter, which I don't use very often, but I probably should, so follow me on those. You can let me know what you thought of this video, if you liked it, if you enjoyed it. You can leave a comment down in the comment below. I would appreciate that. And I also have a newsletter that I send out weekly if you want to stay up to date on business, on stocks, on investing, all that fun world of businesses, the stock market. You can subscribe to that. I'd appreciate that as well, and you will get that. It's most likely every Monday. Thank you so much for watching. I hope you enjoyed this video, and have a great start to your 2019 year.